Good morning, traders. Mark here. The past few days have brought seismic moves across commodity markets with energy front and center. OPEC confirmed it'll boost crude output by 137,000 barrels in December, but crucially, they're halting any further hikes for Q1 26. A big pivot meant to head off fears of oversupply. Oil popped in response with Brent above $65 and WTI near $61. Why? Of course, everyone's now pricing in a tighter first quarter, and even top Western majors are seeing a windfall as Russian supply faces fresh US and UK sanctions on giants Rosneft and Lukoil. If you're long crude, think tactical, scale out some profits, but hold core positions. These new Russian sanctions are likely to reverberate for weeks, tightening global supply. Watch for momentum to sustain in majors outside Russia. Gasoline futures are lifting too, tracking crude higher. US stocks fell nearly 6 million barrels last week, the fourth straight draw, and refiners in Asia, especially Indian ones, will have to pay more for feedstock thanks to the sanctions squeeze. For gasoline traders, lean bullish, but balance with quick stops, as seasonality could bring volatility. For natural gas, prices dipped 0.44% today to $4.10 MMBTU on the New York Stock Exchange, even as the Brent reference ticked up to 2% and the dollar gained. Petrobras announced a minor 1.7% price cut for distributors, but overall, gas is still up nearly 22% from last month. The coming winter should be colder for both US and Europe. Expect heating demand spikes, which could push a rebound in December. If you're trading natgas, use today's pullback to layer in exposure and hedge with weather derivatives. Gold's slide continues as China cut a long-standing VAT rebate on bullion, sending spot prices below $4,000. Silver is also retreating down in recent Indian trade. But here's the twist. Despite the correction, gold remains up 50% year-to-date, driven by relentless central bank buying and safe haven flows. Precious metals traders, don't chase today's dip. Let price action settle and watch for China's tax impact before reloading. Central bank activity remains a bullish undercurrent. On the ag side, global crop prices are steady to soft. Ukraine's grain exports remain constrained, of course, down 30% from last year, and weather's a wild card. Light rain in Oz could cold delays in southern Australia and Victoria, drier than normal in France. Beans could drift lower with reduced Chinese import and ongoing trade friction. For agri-traders, deploy spreads or short-term options. Don't bet the farm on trend moves while weather remains unpredictable. Finally, copper's losing money again, dragged by weak Chinese factory data, while aluminium and zinc are slightly up. One to watch as global manufacturing PMIs come in today. If you're active in metals, stay nimble. Fade rallies in copper short term favor aluminium and zinc on fundamental strength. With all the geopolitical cross currents, Russian sanctions, China's VAT shift, erratic weather, risk management is everything. Enuit's ETRM platform ENTRADE gives you real-time market visibility, advanced analytics, and compliance peace of mind. Use its dashboards to track sanctions, spot profit opportunities, and quickly stress test positions as news breaks. To sum up, hedging beats guessing. So use every tool available and let ENTRADE help you stay ahead. Wishing you profitable trades this week and keep your nerves calm.